Welcome to the September quarter market update for Beulah Capital. My name's Tom Elliott, Director of Beulah. With me is Dr. Peter Mavromatis, our
Hello.
Chief Investment Officer. Good afternoon, Peter.
Good afternoon, Tom.
Now, it's been a most surprising time, not so much in the September quarter, but of course what happened just a couple of weeks ago when Donald Trump came up and won the US presidential election. Now, a lot of people didn't think this was going to happen. I actually did predict it about 6 months ago. Obviously, there is a rejection of the political elites, not just in America, but in places like Britain. We saw that with the Brexit vote some months ago. So what does a Trump presidency, a Trump victory mean for Australia? Well, firstly, I don't think the free trade agreement between Australia and the US is going to be harmed. We actually have a trade deficit with America, so I don't think Trump wants to damage that. The Trans-Pacific Partnership, which is still awaiting ratification in America, however, probably will be a casualty of a Trump presidency. Donald Trump has said he does not believe it's a good idea. Okay, so Peter, what do you think Australian investors need to think about now that Donald Trump has become the 45th President of the United States?
Well, Tom, I think the big increase that we've seen recently in bond yields is going to make it very difficult for certain sectors that are effectively bond proxies. So utilities, real estate investment trusts, or LPTs as we used to know them here in Australia, and also infrastructure, I think are going to come under heavy selling, and that in fact has been the case to date.
So anything where very low interest rates has been driving up high capital values could be under threat now that we see longer term interest rates starting to rise.
That's right, and it turns out that we've been underweight property in our Australian equities portfolio, so in some way we've been insulated from that, but we do have exposures, as you know, to companies like Transurban. We have zero exposure to utilities at the moment.
Now, what about on a more positive front? I mean, since Trump was elected, we've actually seen quite a rally in financial markets. So what do you think are some of the sectors that possibly might benefit from a Trump presidency?
Well, it's been really interesting, Tom. There's been a spike in commodity prices, and companies like BHP and South32 have done really well. Rio has also done quite well. Iron ore prices, as we speak, are pushing $80 a tonne, which is something which I don't think anybody expected even 4 weeks ago. It's really been quite interesting. I think construction's going to do very well.
Well, this is the thing. If Donald Trump's good for his promise to build a 1,600-mile wall between the United States and Mexico, I would have thought that would be quite good for some construction costs, like companies like James Hardie, for example.
That may well be the case. What gets built in the end, of course, remains to be seen, and whether it's a wall or a fence or something altogether different, and whether there's a couple of trapdoors in there, that will be interesting as well.
A big one though, you mentioned interest rates before. Now, the Australian banks, a big chunk of the index, most investors in Australia own at least one of the big four banks. What do you think might happen to bank share prices?
I think that there's going to be a rotation into banks around this period of time, and we're going to get a lot of bank dividends paid over the coming weeks, and I suspect that that'll be reinvested into the broader market. But what's interesting is that strength, if you like, that we're going to see in banks now may come under pressure over the next few months when we get a better handle on what's going to happen with bad and doubtful debts throughout that sector.
Yeah, another thing we look at here at Beulah is, of course, takeovers. We have our takeover target portfolio, which, by the way, had a good 3 months. It was up over 7%, and for the year, up over 18% to the 30th of September. I've been thinking about this. Donald Trump is probably a pro-business president. Having said that, he's a protectionist pro-business president. Some Wall Street analysts are predicting an increase in M&A activity as a result of his ascension to the presidency. Some of our best performers have been South32, which was, of course, the spin-off of BHP. Peter mentioned the rise in commodity prices. Challenger Financial is an interesting group. It provides annuities, and as we know, people near or in retirement are increasingly having to go and buy income streams, and Challenger satisfies that part of the market. And Automotive Holdings Group continues to be another stock we think that eventually will be subject to merger activity. Of course, the Australian new and to an extent used car markets are doing very, very well. Well, Peter, good to talk again. Thank you very much for listening, and we'll do it again in 3 months' time.